Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of NIO, ticker symbol NIO. And so here I am recording this on Friday, June 28th, after the market has closed, and NIO closed at a price of $4.16, being down about 5.25% on the day. And so the chart's not looking that great. It's been a little while since I've done a video on NIO, and so I kind of wanted to take a step back and kind of reevaluate some of my prior analysis because I think it does represent a great learning opportunity. And then I wanted to dive into the chart here and talk about some levels that I think could be acting as dip buying opportunities, but I do think that there is some more downside risk, considering that not only did we close the week, the day, coming down like this, we also closed the month coming down. So switching over to the monthly time frame here, we did get a bearish engulfing candle relative to the candle from May. So I don't think that looks too good, and I do think that we could possibly be revisiting these lows at 361, but I also think it's possible that we find a bottom around 4. So I'll go over that in just a minute, but I did first want to take a step back, like I said, to go over some of my prior analysis. And so my thesis prior to this earnings call, which took place on the morning of June 6th, was that this purple line represented a neckline for an inverse head and shoulders pattern. You can see very clearly here a left shoulder, this big head here, and then I was under the impression that we were starting to form the right shoulder. But on the 3rd, we did open above the previous trading day's high, but we closed below, engulfing that high, not fully engulfing the trading from the previous day, but it did not look so good. And then following that down move, we got some consolidation to the side. And so that to me, it looked like a bear flag. And so while I had the thesis of this going up to test the neckline and then to break higher, the reality was at this time, we saw some bearish signals that were suggesting that this was negating the bullish move to the neckline that would be followed by a measured move to the upside. And so with that, I should have reevaluated my bullish thesis and said, hey, earnings are the following day. We were in a bullish pattern, or about to be, completing this shoulder to the neckline, but instead we got what looks like a bear flag. This would have been the opportunity to pull the plug before earnings, or at least, taking a step back further, looking at the chart with this white downtrend here. We're kind of at that time in the middle between that neckline and that downtrend. And so it's kind of tough to say, is it going to go up or is it going to go down? Since we did, like I said, just see that bear flag be formed, it was more likely to break to the downside, I feel like, or at least this signal suggested that it was much less likely to be going up. And so that is what we saw. So, I should have reevaluated my thesis then and either cut losses then or, just been less bullish. I should have reevaluated. I did not do that, and we have seen price bleeding. And not only that, we saw a drop down below this downtrend, tested it, got rejected from it, and we are now going lower. And it looks like, though, maybe a little bit of hope is that we are above the 786, which is at a price of $4.13.2. We hit a low on the day of $4.14, so we haven't gotten to that level yet. Also, just below 413 is the green line at $4 a share, which does correspond with the tops of this consolidation over here, the tops of this trading. And so that may very well be acting as support, but if it does not, we do have the low that was hit on April 22nd, being $3.61. So I hope we don't go down that low, but I am bracing for $4 a share if 413 does not hold. And so I would say that if we get a wick below 413 next week, but a close above 413, so not 413, no closes lower than 414, then I would think that we're respecting that level. But if we get a wick below and we do close below 413, then I would think that $4 is definitely on the table, and we'll have to reevaluate there. If we start to get more consolidation like this, that's another bear flag pattern, a bearish pattern. We might get a rejection and continue lower. And so I am going to be looking for closes at or above 414. If we don't get that, I'm going to be looking for dips to $4 a share because, unfortunately, I think that's the reality, but, that might be a great dip buying opportunity. And in last week's video, I did get a comment about let's see, this being in a downtrending channel. I forgot to draw it before this video, but let's see if I can just whip something up here with the trend channel tool. This just is based on the standard deviation of the trading, and we can actually see, that we have been trading in this downtrending channel going back to this gap down from September 18th. The close on that day was $10.31. Then we gapped down, hitting a high on September 19th of $9.60, trading within this channel since then, other than this little blip to the upside. But, we have been trading in that we are in the upper half of that channel, but a retest of $4 a share, that could be testing the midpoint of that channel. That could be a nice dip buying opportunity before we do get a bounce and a potential break out of the channel. But if we do start to get closes below $4 a share, the downside could be notable, so do keep that in mind. As of right now, as of the trading day of June 28th, the bottom of that channel would correspond with a price of about $2.60. So while I do not expect price to go down that low, if we start to get closes below $4 a share and then $3.61 does not hold, we might be going down another dollar. So do brace for that. But I am still hopeful. I do still think that there is a lot of upside for NIO. It might just take some more time. And you can think about that as holding the bag for longer and then sucking, or you can think about that as a greater opportunity to add more to the position, get the average down, and then look forward to the breakout whenever we see that from this downtrend that has acted as resistance since going back to January of 2022. So, but we still, of course, need to reclaim this downtrend here, and that would be getting to a price of right around $4.45, $4.46, marked by the 65% retracement here, getting into that golden pocket. We got rejected from it just a couple days ago, so, we need to be reclaiming that. And so, those are my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching. Take care.